Welcome to Smart Stock Watch, your go-to channel for in-depth financial analysis. Today is January 31st, 2025, and we're diving into the latest earnings report from PennyMac Financial Services. Joining us is John, our senior analyst from Smart Stock Watch. John, thanks for being here.
Thank you for having me. PennyMac Financial Services, a leader in the U.S. residential mortgage industry, has just released its fourth quarter and full year 2024 results. There's a lot to unpack, so let's get started.
Revenue and profitability overview. Let's start with the top line. PennyMac reported a revenue of $470 million for the fourth quarter of 2024. John, how does this compare to their profitability?
Well, despite the revenue figure, PennyMac achieved a net income of $104.5 million, translating to an earnings per share of $1.95. This indicates a strong profitability stance, especially when you consider the increase in book value per share to $74.54 from $72.95 in the previous quarter.
That's impressive. What factors contributed to this performance?
Their profitability was driven by a robust servicing segment and strategic loan acquisitions and originations, which we'll delve into further.
Segment performance analysis. John, can you break down the performance of PennyMac's different segments?
Absolutely. The production segment reported a pre-tax income of $78.0 million, which is a decrease from the previous quarter but an increase from the same quarter last year. The servicing segment, however, saw a significant jump to $87.3 million in pre-tax income, up from just $3.3 million in the prior quarter. This was largely due to higher loan servicing fees and lower operating expenses.
And what about the corporate and other segment?
They reported a pre-tax loss of $35.9 million, which is an improvement from the previous quarter's loss. This segment includes corporate activities not directly tied to production or servicing.
EPS forecast and market reaction. Analysts had forecasted an EPS of 3.5 cents for PennyMac, but the actual EPS came in at $1.95. How has the market reacted to this, John?
The market reaction has been mixed. While the EPS fell short of expectations, the company declared a quarterly cash dividend of 30 cents per share, which is a 50% increase from the previous dividend. This signals confidence in their cash flow and future prospects, which might cushion the impact of the EPS miss.
That's a significant dividend increase. What does this say about PennyMac's financial health?
It suggests that PennyMac is in a strong financial position with sufficient liquidity to reward shareholders despite the EPS miss. This could be seen as a positive indicator for long-term investors.
Operational efficiencies and future outlook. Looking ahead, what can we expect from PennyMac in terms of operational efficiencies and future growth?
PennyMac's CEO, David Spector, expressed confidence in their ability to drive strong financial performance, even in a higher rate environment. The company produced $160.3 billion in loans and grew its servicing portfolio to $665.8 billion. They are focusing on unlocking efficiencies through technology and workflow investments.
That sounds promising. How does this position them in the mortgage industry?
With their balanced business model and scale, PennyMac is well positioned to capitalize on market opportunities regardless of interest rate fluctuations. Their strategic initiatives should support continued growth and profitability.
Key takeaways. To wrap up, PennyMac Financial Services has shown resilience and strategic growth in 2024, with a net income of $311.4 million and total revenue of $1.6 billion. The 50% dividend increase and CEO's confidence in future prospects are noteworthy. John, any final thoughts?
PennyMac's performance highlights their robust business model and strategic positioning in the mortgage industry. Investors should keep an eye on their continued execution and market conditions.
Thank you, John, for your insights, and thank you to our viewers for tuning in. Don't forget to like, share, and subscribe to Smart Stock Watch for more financial analyses. We'd love to hear your thoughts on PennyMac's performance in the comments below.